Good morning, everybody. Welcome. Thanks for joining us. We're just going to give everybody a few minutes to get into the room, make yourself comfortable. Couple of things just to check if you can see Max and I, and you can hear me. Hopefully, the chat box is enabled. So perhaps just pop something in the box to let us know where you're joining us from today, and whether it's stopped raining and you got a bit of sunshine, just so we know the chat box is working, because that's the way that you can share your comments and things with us during the session. Sometimes we have a problem with chat box. If you can't put anything in chat box, pop it in a Q&A box, just so we know we've got a way for you to talk to us. Oh, there we go. Chat box is working. Excellent. I'll bet it's you. It's always one of the panelists, but we've got some more. So thanks everybody. Thanks for joining us, and welcome. We are going to wrap up today by 11:30 at the latest. So we'll make sure you can get on with your day, but really appreciate you joining us for this session on MTD, and particularly some of the pricing challenges around MTD. So we're going to kick off now and get started. So we're focusing on kind of all things MTD challenges, pricing, how you're going to manage the workload, what the workflows are, and so on. It's going to be a hugely informative session for you this morning. Just in terms of introductions, so for those that don't know me, my name is Will Farnell. I wear a couple of hats. First and foremost, I'm a partner at TC Farnell Clark, part of the TC group. As of about 9 weeks ago, I founded Farnell Clark back in 2007. We were probably the first 100% cloud practice globally back in 2009. So we have been at the forefront of technology for a number of years. And we're talking about MTD today. I remember talking very fondly about what MTD was going to do for us back in 2018. And here we are kind of 7 years later, but this time we might actually see some real progress. And we'll get Max's views on that shortly. But I'm also co-founder at App Advisory Plus. This is one of our monthly App of the Month webinars. We're delighted to have Dext with us as our App of the Month today. And I'm delighted to be joined by Max. Max, do you want to give a quick introduction to everybody?
Yeah, good morning, everybody. My name is Max Whiteley. I am a chartered accountant. I worked in practice for 14 years, worked at a UHY Hacker Young where I qualified as part of their cloud team. And then most recently, I was a director of a cloud accounting firm called Accounts and Legal, where I headed up their Liverpool office and grew that from just myself in a lonely office to 15 members of the team over there in Liverpool. And most recently, well, 12 months ago, I made the move to the dark side into the world of tech. So I now work for Dext as a product domain expert. And effectively what that means is I am an accounting expert. I speak to accountants, bookkeepers, find out what they want from our product, what pain points they're having day to day, and how I can help our product team go away and develop them to eliminate a lot of those pain points. So yeah, looking forward to getting into this.
Thank you, Max. And just in case anybody isn't familiar with Dext or Receipt Bank, as you were many years ago, do you want to just give a quick overview of what Dext are doing in the market right now?
Yeah, it's always it does always make me wonder how people haven't heard of the world of Dext and Receipt Bank. I was like yourself, Will, a Receipt Bank user from about 11 years ago. And I used it throughout all of my practice working when I was working in practice, and effectively now rebranded as Dext. Dext is effectively a data collection, automation and reviewing tool. So what does that mean? It gives you the ability to get your clients to get their records off them seamlessly. So that's purchase invoices, sales invoices, and bank information. We'll extract all of that information so you don't have to do any manual typing. We'll put that straight into your general ledger product. Or in this case of Dext Solo, into Dext itself, ready to be submitted to HMRC. So we have an array of bookkeeping automation tools within the platform. It grew from just the collection and data extraction piece to approval, supplier statements. We have a browser extension. We have a document vault. We have all sorts going on. So obviously we won't go into all of it today, but if anyone does ever want to reach out and find out a little bit more about the product, then definitely give me a shout.
And I think the point here is that data capture is critical to the things we're talking about today in terms of MTD. I did say to Max that I'd flag something as we got through the session, but here's a good time to do it. And we when we think about MTD, it's making tax digital, so we hear the word tax in the title and therefore make potentially make assumptions that, well, this is something that's going to sit in a tax team, isn't it? But actually, the single biggest challenge we have with MTD is getting data. It's that data collection piece, and actually, the more firms I've spoken to around this, it's in many cases the tax teams are saying, well, actually, this isn't us. We do the year end bit. We can get the data at the year end to do the self-assessment tax return, which we've still got to do. Actually, this is really bookkeeping. And certainly one of the things we're going to look at today in terms of how do you go about capturing that data? How do you get that data from a timely in a timely manner from clients to enable you to do things that are going to have to be done on a quarterly basis? So thanks for the intro, Max. We will come back to some of that data capture stuff in a moment. So broadly, what are we going to talk about today? Firstly, we're going to talk about like what is MTD for income tax, what are the key challenges that we face, and just to kind of start this off, and something that I'm keen for you to kind of hold in your thoughts as we go through the session today. I mentioned that I was talking about tax back MTD back in 2018, when I wrote my first book called The Digital Firm, and I made a statement that I kept saying, and I've started talking about it again now, is that I genuinely believe that MTD is a once in a generation opportunity for us to fundamentally change what we do and how we do it. And the best bit of all is that we get to blame it all on HMRC. So there is so much good that can come out of what MTD is encouraging us to do with our clients, both for us as accountants in practice, but also for our clients in terms of helping clients get better data to make better decisions. And this is a fundamental change, but it's a fundamental change for the good. And as I say, the best bit of all is that we can say to a client, look, this is HMRC. This is a directive, a change in regulation from HMRC, but don't worry about it because we're going to help you through it. We're going to help you do all the things you need to do to remain compliant. And on the back of it, we're going to help you have better quality data to run a better business. So hold that thought kind of in your heads as we go through the session today. For me, this is a great opportunity. Yes, there's a revenue opportunity for us here, and we're going to talk about pricing. Pricing is a big part of this, but actually helping us get closer to our clients, build better relationship with our clients. These are all the plus sides of MTD and things that most accountants want to do anyway. But the challenge is, how do we do it? How do we encourage clients to engage with us on a more regular basis? This is somebody giving us a catalyst to do that, and we saw in COVID, catalysts are a great way to drive change in what we do and how we do it. Um, any initial thoughts on that, Max, before I kind of move on to this?
No, that's absolutely bang on. Yeah, it's there's definitely more opportunity that's going to present itself during this period. So yeah, looking forward to getting into that and touching on some of them as we jump
Cool.
through the agenda.
So we'll cover off the challenges. We'll touch on the idea of spreadsheets versus we say here AI based technology, but what we mean here is purpose built kind of online technology that moves us beyond spreadsheets. Because let's be perfectly clear, MTD enables you to continue to use spreadsheets for bridging software, but we'll talk about some of the challenges we see there, and most importantly, the opportunities that will be missed if we continue to kind of do things the way we've always done it. The main thrust of the session today is really thinking about pricing. How do we go about pricing this for our clients? We've got 4 quarterly updates to do. We've still got self-assessment tax return to do at the end of the year. As much as it would be great to say, well, we'll just charge 4 times what we do at the moment, that isn't going to work. That's a market that is not going to be sustainable. So we'll talk about some of the options around pricing. Max will talk to you very briefly about what Dext Solo can do, and we would love questions and things as we go through. I've got it at the end there, but if anything jumps out at you as we go through the session, do pop it into the Q&A box. I'll keep an eye on that, and we'll pick up any questions as we can as we go through. Let's get cracking. Max, I'll hand over to you to kind of kick this off. Where's the big challenge?
Sure thing. It's a little bit of an echo of what you just said there during the agenda, Will. So just reading this out straight from the slide, the real challenge isn't just about compliance, it's a race against quarterly deadlines whilst waiting on your client's record. So we know we have that January sort of deadline, that squeeze period where everyone drops everything in last minute and in a shoebox, and we're trying to do everything, all of the time. These people struggle with one filing a year, and they're going to struggle with doing 5 filings a year now. So it isn't just about the actual tax return. Like those quarterly filings, they're not going to be too complex. They're just income expenditure. The real issue is getting that information from your clients in real time for you to be able to do them records and not have loads of different push periods across the year. So late receipts, missing invoices, delayed bank statements make staying on track a struggle. Imagine if it was as simple as clicking a button. So that's the perfect world where we want to get to at the end. And I'll touch on Dext Solo, but this is not going to be a sales pitch, this whole webinar. We're going to hopefully get into some real insights and show you sort of what we're thinking about pricing, what the main challenges are, and some of the things that you need to consider in the detail. I often speak to a lot of accountants and bookkeepers who still don't think that HMRC are going to roll out MTD for income tax. But as the closer it gets, I'm getting increasingly confident that there's going to be no further delays to this. So for me, I'd have started a couple of months ago. However, the best time to start is now. So hopefully we can convince you of that.
And I think on that data collection, I mean, we talk to accountants all the time, and we know that January is a terrible time for many accounting firms, and the reason that it's a terrible time is often that clients are getting data to us too late in the day. So what we have is we have an annual problem of data collection at the moment. What we're going to have is a quarterly problem of data collection unless we can encourage clients to change the way that they work, and that's where the opportunity is given to us by HMRC mandating this. So just in terms of just making sure that everybody is aware of the key headlines, and for some context in terms of what we've got to do in a very short period of time, the first quarterly update is due in less than 15 months' time. So in less than 15 months, August the 7th, 2026 is the date that your clients have to file their first quarterly update if they have combined gross income of more than £50,000. So that's the start point. If you haven't yet segmented your client base in terms of identifying who's in, who's out, that's obviously a fairly critical step for you to think about. Firms that I've spoken to, we are generally between kind of 20 and 35%. A third is kind of a good indicator in terms of your sole traders, your landlord clients. So if you've got 300 clients, then there is a chance that 100 of them are going to need quarterly filing in under 15 months' time. And I always say to people, who's got loads of spare time at the moment? The answer is always nobody. And we still have an annual annual self-assessment process to go through between now and that point in time. The second thing at this point, just in terms of challenges that we need to manage, if you haven't yet communicated to your clients about MTD, HMRC have, or HMRC are. So HMRC has already started writing to clients that they believe will be mandated into phase one. So some of your larger sole trader clients will potentially already have had a letter from HMRC telling them about MTD for income tax. And we all know that HMRC are not the slickest organisation, certainly not on the ball particularly. Yet there is a chance that they might have spoken to your clients about this before you. So in terms of things that you should be thinking about right now, having a conversation with your clients is right at the top of that list. Even if it's high level, MTD is coming, this is what it means. Don't worry, we're going to be in touch with you if you're impacted by this, but just get something out there to make sure that they're aware of what is coming.
Right.
And we'll drill down into a bit more of that in a moment. But this sums it up quite nicely, and I'll hand over to you in a moment, Max. But I think the key point to note here is the I don't know what color you call that, Max. That kind of greeny color are your annual submissions. The orange are your quarterly. So what you can see here is that potentially you are going to have to do two quarterly filings before, in the normal world, your clients would have given you the data and information for the annual return for the prior year. So you've got to file 7th of August 26, you've got to file for the quarter April, May, June 26 before you've done the 25-26 financial year. So have a think about how that conversation goes with your client. Um, oh, we need data from you for the period from 6th of April to the 5th of July, the quarter that finished last week. And your client's going to say, well, hang on a second, but we haven't even done last year yet. So these are the kind of challenges that we're going to be facing and why
Yeah.
we need to be having these conversations with our clients right now. You go for it, Max.
Yeah, and I
Talk us
think
through.
I mean, that's exactly the point. And the solution to that, or what I would be doing, would be to get the records in now for that period and have that year end submitted way before August 26th. I know that's going to be a bit of a challenge, but for me, having that, a line in the sand and getting this year end done before you start doing the quarterly filings for the next period only makes sense. It's going to cause real confusion for your clients when you're asking for data in advance and then going back and forward. And what we said there, obviously, Will's highlighted the 7th of August and 7th of November quarterly filings being before that 31st of January filing. But if you leave everything to the 31st of January, 7 days later, on the 7th of February, you've got the next quarterly filing. So you think, that glass of wine you have on the 1st and 2nd of February, like no longer. Like this is where we call it the like the MTD sort of like monster looking over your shoulder. It looks a bit like a coronavirus, but you'll have seen it if we have it on some of our stands at events if you've seen us. But if you do leave everything to 31st of January to do last year's returns, it's going to create this bottleneck, and the bottleneck is going to cause real pain for your team, and the service that your clients are going to get is going to be poor as well, just as a result of that. So definitely something that I would definitely think about, be aware of. And for me, this is the reason why I would start now and not wait up until that point to be able to, not wait until the first quarterly filing is to be done. We want to be thinking, right, okay, the tax year has now passed. Let's go ahead and try and get as much as it's done before we need to do that first quarterly filing.
Yeah, I mean, I've focused on this kind of almost bizarre situation where you're asking for data for a period before you've done the previous period, but actually that I'd kind of almost missed that 7th of February filing, and let's say it's 100 clients that are in that phase one, then you've done all of your tax returns in January 27, and then you've got 100 quarterly updates to do. And we say it's 100 quarterly updates, but the other bit, just in terms of, again, making sure that everybody understands the approach of MTD for income tax. If you have multiple revenue streams, that's multiple quarterly filings for a single client. So if you've got a client with rental property and two sole traders, for example, in terms of separate trades, then we are talking about three quarterly filings for that one client. So therefore, if 50 of your clients have got two income sources, those 50 clients equate to 100 filings plus the other 50 you've got. So actually it's 150 filings on a quarterly basis. The other point that has changed in the latest iteration is that now quarterly submissions are effectively year to date. So what happens? You file quarter one. When you come to file quarter two, you're filing effectively for the 6 month period. Quarter three, you're filing for the 9 month period. Quarter four, you're filing for the 12 month period. So rather than a collection of four quarterly filings in the way that you might do a VAT return, this is a rolling process. That's correct, isn't it, Max?
Exactly that, yeah. And I put that on this chart. So you see on the first one, 6th of April to 5th of July, second one, 6th of April to the 5th of October. That is absolutely correct, yeah.
Yeah. So that's a change, and what it means is that actually, if we think about the workflows and the way we design the workflows, it should make the end of year self-assessment much more straightforward than it is now, because we've got the data, we've done the work, and we'll talk a little bit more about the process here, and why we think that actually this is probably not a tax team thing in terms of quarterly updates. So we'll touch on that in a moment. Anything else on this this slide here, Max, that you want to highlight?
No, no, happy to keep moving.
Excellent. Um, so the start point is that MTD spreadsheets are classed as digital, but you need bridging software to essentially make the filings. So what we want to do here is just explore briefly why my suggestion and certainly Max's view is that despite the fact that there is the argument that well we've used spreadsheets for years, therefore we can continue using them because they've worked before. We are in a different position here, multiple revenue streams and so on. So we just want to think about like what are the challenges if we make this decision to kind of choose spreadsheets over software that is built purposely for what we're talking about here. Do you want to highlight some of the key bits here, Max?
Sure thing. Yeah, I think that is right. Why change something that isn't broken is often the approach that we see. And sometimes you might have a nice process where you send a personalized spreadsheet out to your clients, which they fill in income, expenditure, savings, interest, and all of that good stuff within there. But like Will mentioned on the last slide, is you're going to have a quarterly filing for each of your clients. And if they have multiple income streams, you can have multiple quarterly filings for each of those income streams, for each of those clients. All of a sudden, you've got spreadsheets coming out of your ears. And how do you know where everything's up to? What's been filed? Is there any errors? Have people changed spreadsheets? Obviously, we're doing accumulated returns. Things might go missing, or there might be errors. So I think by using spreadsheets with the amount of filings that are needed across all of the income streams, across all of your clients, is going to make spreadsheets error prone. There's going to be more, inconsistency across all of the users. There's less visibility across all of your clients. There's less automation. Obviously, you're still manually typing everything up. There's going to be limited collaboration across teams with, no like one direct portal to where everything's up to and scale. And as you scale and as you grow using those models, it's going to be even more of a challenge. Those risks are going to get just amplified even more. Again, there's going to be no real-time insights, so you're not doing any real-time collection. You're obviously, waiting on for those quarterly filings for everything to come back. If you change the mentality of a human and, so they're not having to do it on a quarterly basis there, when they get a receipt, they take a picture. When they get a sale, they create it through this app. It becomes baked into their day-to-day running of their business. And, by doing so, they also get those real-time insights as well. And the change management piece becomes, they keep on top of their records in real time rather than this thing that we've taught business owners to do, which is do it when the deadline is calling and only at the last minute within there. So yeah, I think there is a lot of limitations to spreadsheets, and yes, they have been simple in the past and really easy for some business owners to understand. But I think for you guys and for your clients going forward, there is going to be a lot of limitations with just the volume of filings that need to be done.
And I think as well, it's the fact that the change here is that there's a massive increase in workflow management we've got to deal with here in terms of visibility of when stuff's filed. Historically, you might have got a spreadsheet that the client filled in themselves with all of their income and expenses on. It was a one-off exercise. You took the data, you put the data into your tax software to enable you to file a tax return. So it's one spreadsheet equals one filing. What we've got now is we've got four filings plus an annual filing. We need to know when those quarterly updates have been filed. So where's the visibility in terms of who's done, who isn't done, who's outstanding. So there's all of these factors that we have to consider, and thinking about using tools that are designed to do this will give you greater visibility via dashboards and so on. Because if we're using spreadsheets, then we become dependent on workflow tools to make sure that we've done the things that we need to do. But for me, the key here is going back to what I said right at the beginning. This is an opportunity to change what we do and how we do it, and add real value to clients. And that comes from this concept of real-time insights. We want, and when I set Final Clark up in 2007, 2008, when we moved to using online technology, the reason we did that is I wanted access to my clients' data. I wanted to be able to see what was going on in their business. I wanted them to be able to call me and say, hey, well, I've got this problem. Can you help me? And I could look at the same thing as them. That's what we're working towards here, the ability to be able to give our clients the kind of support they need. And this isn't an AI session, but with everything that's going on with artificial intelligence, it's the human stuff that we do that's going to continue to keep us relevant. So being able to have access to this data to drive the conversations we need to have with clients is critical. MTD gives us the opportunity to do this and blame it on HMRC. On the basis we've said spreadsheets, yes, you can use them. Are you going to deliver real value? Is it going to be the most efficient way for you to do it? Probably not. So therefore, we need to be looking at tools that enable us to do this in a very deliberate and considered way.
Yeah, exactly that. And we obviously these things that are on screen at the moment, I'm not going to talk through them all. And it's sort of the opposite to what we said was with the spreadsheets: better workflow management, better collaboration across teams, better workflows, consistency across your whole practice, scalability, full audit trail of what's gone on, who's done what. And but like Will mentioned there, AI is developing at a rapid pace. And I've seen some of the stuff that our product team are doing in the background at Dext. And it is crazy. Like we're building sort of like AI agents. I was going to call them bots, but agents is the official word to where they can like sit on your email inbox or sit on your client's email inbox, look for items that need to be put into your accounting records. They have AI agents sat within your Dext account, so they know how you've done things in the past, what you've done, have you changed anything, have you gone onto an invoice and always typed in the purchase order number in the description box. Okay, we'll do that in future for you. Like, it's a whole customized approach to how you as a person act. And with Dex having, Dex processed something like, what was it, 330 million documents last year. We built sort of like these large language models in the back and AI in the background to they have the context of what's going on and how the industry wants these documents to be sorted. But then on top of that, how you as a bookkeeper act, what it is you do day to day within your bookkeeping tool, and AI will start to sort of replicate that and help you, like Will said, focus on the advisory piece, focus on the tax advisory and making things taking that service to the next level and actually providing a service that isn't just manual data entry, but is what we train to do as accountants and bookkeepers.
Yeah. And this slide kind of just summarizes, doesn't it, that yes, spreadsheets are free, but actually we need to think about the time that goes into this. We need to be looking at efficiencies. Our workload is about to go through the roof, and we're going to come on to pricing in a moment. And part of the pricing discussion is who's going to do what. So are your clients going to do it? Are you going to do it all, or is there kind of some hybrid in the middle? The likelihood is, as we know, that clients might think they can do this and very quickly realize that there are challenges. So we'll come on to that in a moment. But I think this is a really interesting slide, Max. Do you want to talk
Yeah,
us
sure.
through
So
this?
something that's not really in my interest to tell you all about. It's not in the interest of Dex, but it's the honest approach of how I would do MTD in practice. So there is a whole heap of solutions on the market at the moment. There is Dex, Zero, Free Agent, Sage, QuickBooks, It's quite overwhelming. And what you'll find with those solutions of the sort of nature of the ones that I've just said is they're not all singing or dancing tax software. So they're not like a tax filer or a tax calc or an iris. They're not quite that advanced. So whenever you have like advanced tax adjustments, you're splitting them as some personal allowance between two partners, you're doing strange things with pensions and things like that. Often these softwares won't be able to support them, and you'd have to do the submission through your all singing all dancing tax software like tax filer, tax calc, or whatever it is that you guys are using. So I always, and me and Will have talked about this in the past, of like running your accounting practice effectively like a McDonald's, where every single one of your clients does the exact same process, and that's how you gain a lot of efficiency. Your team become experts in a process. The deliverables are always the same. So for me, if, for example, Dext doesn't, have the ability to do some of these stranger tax adjustments, and there's a proportion of your clients that you have to take out of the software, then maybe, that doesn't fit the model, because you can't do the same solution for absolutely everything. So for me, this is how I would do it. And this works for all MTD approved solutions. You would use Dext, in my opinion, for, this could be any solution here. but you can use Dext to collect your information. I think Dext is the best at grabbing information from clients, extracting that information, and doing those quarterly filings. We've got to remember that these quarterly filings are just income and expenditure. They don't need any of these fancy adjustments. So as you can see here, these are accumulative throughout the year. And you do these quarterly filings, and they get sent to HMRC here in the middle. Okay. HMRC is effectively the integration tool between Dext and your tax filing software. Okay, so Dext does do the end-to-end. It can file the smaller tax returns, which is that box at the bottom there. But what happens here is you do your quarterly filings of income and expenditure. They send up to HMRC, and then you can pull down the totals back into your tax software, whatever that may be. Again, tax file or tax code, and you can make the adjustments in there and then file them across to HMRC. And this also gives me sort of a bit of indication about what Will was talking about before. This is effectively bookkeeping. So why should the tax team now do it? So if I take myself back to my time at UHY Hacker Young, we had a separate cloud accounting team that we did a tax team. If I turn around to that tax team and said, right, now the policy, now what you've got to do is you've got to go away, train all of your clients on Dext. You've got to get them to send everything in on a quarterly basis. Do your bookkeeping on a quarterly basis. Do the quarterly filings. When it gets to the year end, ask the client, the standard stuff that you do. Has there been any anything else we need to consider around pensions or charitable donations or whatever it is that you ask in that questionnaire at the year end? The change management piece for that tax team at UHY would have been huge. Like they would have been totally overwhelmed by the process and what they have to do now. So for me, what would be better would if the cloud accounting team, who are used to training people on Dex, they're used to using the solution, they go out, they get a new list of clients, they go out to those clients and say, right, okay, you send everything in into Dext, we'll do the quarterly filings for you. And then the tax team now, instead of asking for a big box of records in January, they turn around in the office and they ask that cloud accounting team, is everything ready to go? They say, yeah, everything's been submitted to HMRC. They pull everything back into their all singing, all dancing tax software that they're already used to using. They ask a couple of questions to the client as usual, if there's anything else they need to consider, and then they do the normal filings to HMRC. So there's zero change management. We've been as efficient as possible. Every single client has followed the exact same process. And yeah, that's £2.50 per client per month by just adding that to Dext. And there's a real sort of opportunity to just effectively look at your pricing based on that bookkeeping piece and makes everything a little bit simpler on that front. So yeah, that's my thoughts on that, Will.
Great, thank you, Max. And I think that the key point that we're making here is that the quarterly updates are a separate step in a process that we don't have at the moment. At the moment, we get the records from the client at the end of the year. We will enter that into our tax software. The shift here, and all of the tax software will do this, is it will have the ability to pull data from the quarterly submissions down from HMRC to populate into your Iris, your CCH, whatever it is you're using. So the additional part of MTD is data collection and quarterly updates. That's the point. And we've had a question come in that says, why would you do this in Dext and not in Xero? So I'll come to you in a moment on that, Max. I think the first point is that Xero on its own doesn't do data collection. You need to use something like Dext or HubDoc or Auto Entry or something to actually collect the data. So, and the second point here, I think certainly when I look at our sole traders, landlords, they're not currently in Xero. In many cases, they're not currently on anything. So therefore, we've got to choose a software solution that will enable us to A, collect the data, and B, do the quarterly filings. For us, we've used Dex since 2011. So that's the obvious choice for our firm. Every firm's going to be different in terms of what they're using. If you are using HubDoc and you're a Xero partner, then yes, there is an argument that you can do that. We'll touch on a couple of differences between Dext offering and others, just so we're kind of clear on that. So I think it's, in many cases, these are clients that are not already going to be on cloud accounting software. So you've got to find a solution that does it for them. There's two parts to it. There's the quarterly filings and there's the quarterly updates. So in the case of Xero, largely it arguably it needs two solutions, but it could be HubDoc. And in terms of the way that Dext operates, and something we touched on, if you have multiple income streams, so you've got rental and you've got two sole traders, that's three filings. So in the case of most of the solutions, you would need a license for each one of those three income streams. So if it's a zero ledger or a zero cash book or whatever that you might be using, you'll need three of those. Within Dex solutions, I think I'm right in saying, Max, that you can file up to five income streams within one license.
Correct. Yeah, five income streams per client. And one of those income streams can be UK property, which can have multiple properties underneath it.
Yeah. So for most clients, one license is going to cover all of the filing requirements that they've got within
Yeah.
one license in most cases.
Yeah. And if you use zero tax, like you can still pull that information back down into zero tax from HMRC whilst using Dext. So you can still use zero in the workflow if you'd like, but I think in terms of collecting the information, extracting the information and manually typing things up, and the price per month per client, I think we've got a real good solution. But I promised that this wouldn't be a sales pitch, so I'll give you a little bit of an insight at the end. But there was another question that came in here saying, through Dex, we can't file annual returns. Is that correct? You can file annual returns, and that's this box at the bottom right-hand corner. You can do the quarterly filings and the annual submission through Dex. However, what I was saying there was that, for example, if you had capital allowances that you need to do some strange adjustments in there, you wouldn't be able to do that from within Dext. It simply is quite a a straightforward tool to do your income and expenditure from within there and get that filed across. So, for example, if I wanted to have the same process for all of my clients, this would be the process that I would take.
Yep. Thank you, Max. Right, let's talk a bit about pricing for the last part of the session, because this, I think, is the biggest challenge that I'm hearing from firms that I talk to at the moment. How on earth do we price this? Four filings, still got an annual return to do. Clients are price sensitive already. I mean, where do we start? I mean, for me, the point is, and I make this point regularly when I talk about pricing, is that if you don't differentiate value, then people are just going to compare on price. So the start point is, how do we use MTD to demonstrate real value add beyond just the fact that, hey, Mr. or Mrs. Client, you've got to do this because HMRC have said you've got to.
Yep.
Where are we delivering value? But I'll leave you to talk through these next few slides, Max, and I'll kind of interject as we go through, because Dext have put a guide together on pricing as well as a couple of other elements of MTD, and we'll share some QR codes for you at the end.
Yeah, sure thing. So I think the first thing on the left-hand side is test the waters before full rollout. This is new. Like I don't have an answer here to tell you it's going to be £500 per client per month. I'm not going to give you that, but I'm going to give you the thought process about how I would go around thinking of this. So for me personally, I wouldn't go and put on my website, this is our price for MTD. This is what we're going to charge. Go ahead and do it. Obviously, the benefit to the slow rollout from HMRC is you're going to have segments of clients that go through this slowly over the next 2 or 3 years, and we'll sit there looking at 30% of them to start with. I would go away and sort of, when you come up with your pricing consideration, then start segmenting your clients, finding out, which ones have our property, which ones are in the property bucket, which ones are in the sole trader, which ones are in the e-commerce section. For those who, it's the same thing with your limited company clients. The clients which have more work or less work from within there, and then go away, create your pricing plan, and then start to roll that out. For me, if you're if you have different packages, you may have a premium package, a basic package, and a below basic package. If everyone's taking that premium service, your probably prices are too low, and vice versa for within there. So for me, I would come up with a plan and start to roll it out slowly and work out, what the market is feeling towards your pricing, and you can make any adjustments as you go through within there. But we're going to talk on our next couple of slides about how I would look around that pricing to start with. And then again, like, make sure you're segmenting your clients early. So yes, who are your first clients to be enrolled into MTD, but what buckets are those clients in, and start to sort of approach them separately around pricing. And your wording is going to be different, your value add is going to be different for all of these clients. So don't just have a blanket approach for everything. Go after these clients in individual bucket basis, would be my opinion.
Excellent. Ready for the next slide, Max?
Yes, please. Okay,
There you go.
so this is how I would definitely look at doing things. And this is like a tiered service model. It gives a bit of flexibility to your clients. So, you know, they get an option and they don't feel like they're getting pushed down a certain route. So here I've done it as a bronze, silver, gold service, and I probably regret having this as gold in the end because this suggests that it's good to bring everything in a paper bag. But our bronze service effectively is our least touch. So we give client the access to the software. They do all of their bookkeeping. We just effectively check things in our software, and then we submit them to HMRC at the year end. So the client is uploading and categorizing everything themselves. We're just effectively looking at the filing, making sure it's okay, and sending it across. The silver here is like a hybrid approach, which for me is where I'd like most of my clients to fit, which is we give them a software like Dext where they go ahead and they send everything into us through that portal. And then as us, as the accountant and bookkeeper, we go in and categorize all of these expenses and transactions, do all of the filings and send everything to HMRC from within there. And then the gold service, if you know you do have those clients who just don't want to get on board with the world of tech and they want to bring that bag of receipts in at the year end, they can now bring a bag of receipts in on a quarterly basis, and you'll go ahead, you'll take all the pictures of everything, you'll scan everything into Dext, do all the bookkeeping, and send everything over to HMRC. So this is a great tool, but obviously we have the risk that you could have someone in bronze category who has 3 income streams, 10,000 transactions, and you could have someone in the bronze who's 1 income stream, 50 transactions. So we still need to take this to the next level as just a tiered service model wouldn't work for absolutely everyone.
Yeah, and just my observations on this is that there is sunk cost in here. So if you take somebody on bronze, the likelihood is that they're going to categorize transactions in the wrong places. So we are instantly creating additional work for ourselves when we come to that year-end process because there's far greater review work. Anything that we are controlling, the quality of the data gives us a much slicker process and a much easier year-end process. So we even with our bookkeeping clients in our business, we don't let people categorize in Dext. We insist on doing that because we make sure then that stuff lands in zero in the right place. And you're not having to go back and unpick and deal with all of this. So just factor that in when you're thinking about clients doing it themselves. You've got to build in the time in your annual fee to fix all of the things that they get wrong
Yeah, correct. Yeah, and
in
be
the
strict. I'd say yeah,
process.
be strict on that. If the client isn't playing ball, and you know they're they're not doing the bookkeeping correctly, that you're having to don't feel like towards the end of the quarter that you should go in and do the bookkeeping for them. This is an opportunity to say this is not working. You need to move up to the silver package, or else we're going to have to stop acting for you. Don't let people sign up on a bronze service and give them the world. So just be very strict on that with your teams as well. Okay. Jumping in, obviously we have here volume-based pricing. Okay, so this is effectively the opposite to what we were talking about there. We price based on transactions. So no matter how many income streams they have or whatever's going on, you price, from 1 to 50 transactions, they get priced at this, 50 to 200, they get priced at this, and so on. But again, if you just did volume-based pricing, we miss out on that tiered-based approach as well. So you could have clients who have 1 to 50 transactions that you're doing much more heavy lifting for them, or you could have 1 to 50 transactions and they're doing everything themselves and they're paying the same price, which wouldn't be fair to those clients. So for us, we think that a combination of those two, of like a hybrid price model, would be a good suggestion. So obviously when we do talk about tax in the past, we do have cost-based, we often do cost-based pricing, which is charging based on the amount of transactions or the volume of transactions or the amount of hours it takes us to do something. We then have value-based pricing, which is, how much tax have we saved you? And you'll pay a percentage of that. So, we think of things like research and development, which probably wouldn't be suitable here for MTD. So we've got a price instruction model here at the bottom. So we've had the tiered service, which we talked about. the volume-based service that we talked about, and then we're going to move on to the hybrid model here on the next slide. Okay, so this is a hybrid approach, and this is what I would do if I was going in and rolling this out with my firm at the moment. Okay, so at the top here, you can see we have like 1 to 50 transactions, and then we have bronze, silver, gold approach, and we have a multiplier here based on the volume of transactions. So based on how many transactions they do, we have a multiplier here of what that fee is going to be. So this is just for those quarterly filings. You may want to have another multiplier, like Will said at the top, which is a multiplier for that year-end finalization piece there, because they are doing the bookkeeping. It's going to require you to check more information in there before it gets filed. So this is how I would approach it. Have like a bronze, silver, gold, but in each of those have a multiplier for the amount of transactions they have. You may even have multiple multipliers based on complexity. So you may have in number 3 on the right-hand side, we've got consider an income stream multiplier. So if they've got multiple income streams, yes, they may only have 50 transactions, but they may have 5 income streams. So you're going to have to do 5 quarterly filings, and it gets a bit trickier. So you might want to have another multiplier via, how many income streams do they have within there? And you can do that from there. We've actually built like an Excel pricing guide that sort of replicates this. It's super basic, but if you don't have something that's like a Go proposal or a socket or an ignition that you can upload a pricing menu to, having a pricing spreadsheet or a pricing guide like the one I can provide you with definitely helps to systemize it, and all of your team can then go out and price on the same basis. But yeah, I definitely think that this does really lend itself to using proposal software. So definitely, if you're not already using some sort of proposal software, go away and use it. These are smaller clients. They don't all need to be priced by the partner or the senior manager in the firm. Get your team doing pricing, get your team going out and have that systemized approach to pricing where, right, okay, what are you willing to do for your service? How many transactions do you have? How many income streams do you have? Is there anything else we need to consider? Okay, here's your price. There's no movement on this, and we're going to capture scope creep as you move on, and we do these quarterly filings. So every quarterly filing, we're going to go in, we're going to check how many transactions you do, and we're going to capture that scope creep as we go on. Because this
scope creep is key here, and I think that the benefit that we always got out of using proposal software is that it was very clear in terms of what's included and what's not. And I think this is so important when we look at pricing for MTD in terms of what are we making the assumptions on around price, and hourly is a challenge because clients are concerned about output, whereas hourly pricing means that we focus on input. So we're focusing on the things that are not of any relevance and interest to the client. So the benefit of using transaction volumes is that it's based on the output. We are going to process 50 transactions for you, and the cost of that is X. If we generate efficiency when you're pricing based on transaction volumes, we make more margin. If we generate efficiency when we're on hourly billing, our price goes down. And we shouldn't be penalized for making efficiencies in the way that we work. So having said that, the reality is that even with output, we are looking at cost-based pricing models. We're looking at, well, how long is it going to take us to process 50 transactions? What's the cost of doing that? What's the margin we want to make on that? And that's how we arrive at the pricing for those transaction volumes. But we need to be moving away from hourly pricing because clients just don't like it. Because there's always that, well, did it really take you that long? Whereas output is really clear, and making sure that we have clarity around scope means that if scope changes, price can change with it. But sometimes we've got to be prepared to say, you know what, actually, we thought that you were 200 transactions, you actually only 100, and therefore we need to adjust the fee accordingly. It's got to work both ways. Max, we've had a few questions, so let's just rattle through these. So firstly, a couple of people have asked for the slides. We will be sending an email with the recording and the slides and things after the session, so everybody will get those. So that's all good. Question, can you please clarify if the submissions are summarized income and expenses rather than detailed expenses? I think they're summarized into SA100 boxes, aren't they, Max?
Yeah, correctly. Yeah. So within, like, I could speak from like a Dext platform, you get all of your nominal codes are mapped back to an SA1 box within there, and those those totals will get submitted up to HMRC.
Yeah, perfect. Let's some other considerations here, Max, if you want to take us through these.
Sure thing. I've just had another couple of
Are you
questions
there,
come.
Max? Sorry,
Um,
there was a
it's all right.
pause.
It's all right. Now I'm gonna um just answer these. So Ellen's just put who maps the codes within the software. That's down to you. So obviously tools like Dext, they don't integrate into like a general ledger product where you would normally pull your nominal ledger from there. You go in, you create your own chart of accounts within there, however your client wants to see it. And when you create that chart of accounts, the tool will just ask you where you want to map those codes back to. We'll give you like a pre-populated list to start with, but if you want to customize them, every time you create a new category, you'll map it back to whatever box you would like. Okay.
Excellent. Thank you, Max.
No worries.
Yeah,
So
do you
yeah,
want to run through these other considerations?
sure, other considerations. So a few things on this is, I mean, a lot of the things we've already talked about really. One is, be proactive. HMRC have already sent the information out. Other accountants will also be sending other information out, trying to win new work and using this as an opportunity. So even if you're at a point now where you're not ready and you don't know what you're going to do, just put at the bottom of your email footer, we are, we've got a solution for MTD income tax, and we'll be in touch soon. Just as a line, just so they know, or they're aware that you have got their best interests at heart, and you're gonna be reaching out very shortly, just so they know, because people are going to be talking about it. The Bob down at the pub is going to be not just saying he's saving tax, but he's also on a new fancy app that he's using to get ahead of MTD income tax. So yeah, just be proactive and definitely look into that, and just let your clients know you're there for them. Emphasize the benefits, so it's not just all about risk, but do lean on the fact that you have to do this for HMRC, and it's a great opportunity to create change, like Will has said, from within there. Often, there's going to be opportunities from here. There's going to be some upsell opportunities from within here, not just from upselling people from bronze to silver to gold package, but upselling people, to tax planning or advisory, or whether you're working with financial advisors or you have some internally, whatever that may be, you might be able to start generating some more income streams by having the regular touch points. I think we found this, didn't we, Will, from cloud accounting, just in general, like, yes, it was great and it gave people transparency and but it made the lives of accountants probably a lot busier, because the clients now saw their information in real time. They knew what they were making in real time. They had more questions, and therefore they wanted more. Like, clients never used to ask me for cash flow services before they were on Zero. Now they have everything there live. They now want cash flow forecasting as like a regular thing. So I think there will be more interest in the numbers, as people do have these portals and things that at the touch of a button, and they'll want more information and want to know how they can improve their business as well. Take the opportunity to move to monthly billing instead of annual billing. Again, it's going to improve your cash flow as a business. Try and host some seminars around tax and tech. So for you to go out and train all of your client base on, for example, Dext, for those £120 a month clients, or 100 or £150 a year clients in some instances, it's going to be a real drain, and it's probably not going to be possible for you guys to be profitable doing that. So for me, what I would do is I would offer some free tax and tech, tell everyone about what's going on. They've got to come to your office, go on a webinar, and they're going to do a 2-3 session training session on all of this. It's going to be an interactive session. And if they don't turn up to those talks, then they will have to pay £100 an hour for one of your bookkeeping team to go ahead and train them on the tool to get them up to date. But often the free things give them the opportunity to come in and network with each other. They probably will enjoy that. And then if they don't want to come on board and do the mass training sessions, they can pay for a personalized approach at a fee, that whatever you charge on an hourly basis. And then finally at the bottom there, outsourcing versus offshoring. It's a hot topic. It's something that I didn't agree with, didn't agree with, couldn't really work out whether I thought it was going to be something that we rolled out. If your team does have capacity issues as it is, and MTD is scaring the life out of you, then maybe this is something that we look at. Because if you get a VAT return wrong, you could end up with some sort of penalty or fine for doing so. If you get a a quarterly filing wrong for MTD, there's going to be no penalty. You could actually, I know this is probably not the way to go about it, but you could file nil returns for every quarter and not receive any penalty within there. If everyone started to do that, then HMRC would definitely have an issue and penalties will start to fire out. But in the first instance, there's no penalties or fines around misinformation from within here. So if you make an error in the first quarter, you can pick it up in the next quarter as well, and nothing will happen from within there, as we have that accumulated approach from within there. So maybe it's the time to maybe start working with an outsourcing team. You have a bit more patience with them, because an error isn't the world's worst thing in the world as it would be for a bigger client that is VAT registered. So potentially, if you were ever thinking about outsourcing, maybe this is the time, would be my thought process. But again, I'm on the fence. I'm not saying it's the right thing, the wrong thing to do with that.
Thanks, Max. And we've got a couple of minutes left. So do you want to just give a quick overview of Dext Solo and your solution and where you think it fits?
Sure thing. So again, Dext Solo, for those of you who are aware of Dext and what it does, we capture information. We usually scan it, extract the information, and then we push it to things like QuickBooks or Xero. Dext Solo does not push to an accounting software. Dext Solo is a standalone solution. So it makes it really easy for your clients to send you documents. They have a personalized email address. They have a mobile phone. They can drag and drop things in, and everything comes into the software. We'll extract it. You can also connect your bank feed directly into Dext. You can code your costs, sales, or bank transactions directly from within the software, or you can match them up against each other if you see fit. We'll then produce two reports. We'll have a client report, which only the client can see, which is just their chart of accounts, and use the accountant will see that report, but also see the tax report, which everything is mapped back to. And we're sort of obviously an approved solution with HMRC. We've been working very closely with them over the last 2 years, and you can do your SA 103F and SA 105 from directly within the solution. We can do the quarterly filings already from within here, and again, we're MTD compliant. And again, which Will mentioned earlier about HMRC not being the best when it comes to answering the phone and getting hold of. For me, I would definitely consider trying to get on early, getting onto that beta before mandation, just so that you have that dedicated support team at HMRC. You can get through to them because they have this beta dedicated team. Because when everyone then signs up for MTD, you're going to have that issue of maybe something hasn't gone the way you planned, and you try and contact them, and you're in the same pot as everyone else. It's going to be a real pain. If you get on early, and you can do that by contacting myself, and you can sign up for the beta through Dext, you can start getting into that process and ironing out any creases before mandation happens. But like I said here, it's the same stuff that you'd experience from Dext as a product. You have your submission methods. You can auto categorize things. We'll detect duplicates. We can automatically disallow certain categories. So if it's motor, disallow 50%. We can do all of that good stuff. You can search through any document via any amount or text field that's on the face of any document. You can download all your reports, and we can deal quite nicely with rental income. You can say, I own 50% of a product, so any cost or income that gets attributed to a property will only apply that amount from within there. And for 5 income streams per client, it's £2.50 per client per month. So super, super cost effective. Probably the most cost effective solution on the market, and the best for collecting information and automating that whole categorization and manual data piece from within there. So if you do want to have a little look, then definitely do reach out to us and the team. We've got an ultimate MTD income tax toolkit. We've got 3 of here: pricing guide, the road to 2026 and the plan for MTD income tax, and then our making tax digital for income tax guide there as well. So go ahead, scan that, download those tools. They're really useful. A lot of these have been created by Paul Lodder, who, if you don't know Paul was a partner at a firm for over 20 years, and he's sort of really, if there's not, I don't think there's a man that knows more about Paul, or I've not met a man that knows more about MTD than Paul does. So definitely worth a dive into there.
Excellent. And we will share the QR code here in the email that we send post event. So if you haven't captured it now, we'll share that, and you'll be able to access those resources from that email. And I think on here is contact details for Max and I. So again, if there is anything you want to follow up with, please feel free to get in touch with either of us. LinkedIn's always a sensible place to start. So we are bang on 11:30. We answered some questions as we went through. There's nothing else in the Q&A box. So big thank you to everybody for taking the time out and joining the webinar. I hope it's been useful and informative. My key points are: contact your clients right now. Start thinking about this. If you haven't done segmentation, start looking at who's affected in 2026. And we are 15 months away from the first quarterly filing, so time is very much of the essence. Max, any final kind of key takeaway bits from you?
Yeah, I think, like I said at the start, the best time to start was a couple of months ago, but the next best time is to start today. Get moving, get cracking, get segmenting those clients, and realize that the main issue is collecting information from your clients and who is the best team to do that. Is it your tax team? Is it the bookkeeping team? What can you do to alleviate a lot of change management and extra work that doesn't need to be done within there? So yeah,
Yeah,
keep it simple
brilliant.
and
Max, thank you very much indeed for joining and sharing your insights this morning. Thanks everybody else for attending. Have a great day. We'll get the recording to you in due course, and see everybody again very soon. Thanks everyone. Take care.
as well. Thank you.